when the news of Fashion Valet resurfaced, right, on the company going bust or they going under, right, post the pandemic, typically speaking, corporate news is quite boring, right? A lot of people just flip through corporate news. But this, however, captured a lot of people's imagination. And I think part of the reasons why is that it's happening, or this news came out during a time when inflation is relatively high, the job market is relatively shaky, right? And what happened is that when this news came out, right, about Fashion Valet getting investments from government-linked investment companies or GLICs in the form of PNB and Khazanah, a lot of people just had their opinion, and it just spread very rapidly, right? So the whole thing of it all is that why is there so much of attention on this particular news, right? Basically, when funds are invested by GLICs, it's actually public funds, right? And when it's public funds, right, it's actually funds which can be used otherwise for the people, right? And at this point in time, what is happening is that, as I mentioned, things are getting expensive. And on top of that, people are struggling, right? Instead of, where these funds can be used for the embetterment of people's lives, right? We were made to understand that it was invested in this particular company. Granted that the company went under post-pandemic, and it was a couple of years ago, people were still relatively annoyed, right? So a couple of things right now. Number one, I'm going to talk a little bit about what is Fashion Valet, right? For those that don't know, right? From the top, just going to give you a very quick description. Fashion Valet is an e-commerce company, right? It works exactly like our Shopee or Lazada, right? Where if you want to buy things, you can actually go to a particular website and you buy things. But why Fashion Valet was very popular and it was very, I guess, very ahead of its time was that at that particular point in time, there were not many Muslimah or modest clothing websites for Malaysians, right? And what it is that, and it was also an e-commerce platform, right? So when they actually came into the scene, a lot of shopping was done in a brick and mortar store, right? Where you actually go, you buy the things, right? And you need to drive, right? You need to find parking. You need to, spend at least 1 or 2 days in order for you to shop, right? So Fashion Valet not only offered convenience, but it also enabled people to actually shop from the convenience of their home, right? And how the business model works, right, is this. They will curate and also they will put a lot of local brands on their websites, right, to actually show what they're selling. And back in the day, in order for a lot of these local brands to market themselves, it was very difficult. If you do it via physical store, right, it was expensive. You have to buy racks. You also have to have inventory. You also have to have salespeople. It was expensive. It was very, very expensive, especially the retail model and a bricks and mortar model, right? So that's one of the reasons why a lot of local brands, they could not show themselves. And Fashion Valet actually was actually a very good platform, right? And let me give you an example. Assuming right now, I am making glasses, right? And my margins is about maybe 50%, right? And I want to sell my glasses, right? And I don't want to go through a shop, or I do not want to actually rent a shop, buy all the furniture fittings and get someone to actually stay at the store, right? So what I can do is actually go via Fashion Valet, which is getting more and more popular, right? And hence that was the whole basis of that business. And I think on paper, it actually made sense, especially back then, right? And to be very honest, right, I also have a couple of friends in the private equity space, right? Where private equity investors, what they do is they would do initial funding for companies, right? And since Fashion Valet did not go IPO, right, so it's still a private entity, right? So I think one of the things which I learned from my private equity friends is that, out of 10, right, there will be a couple of deals which don't go as planned. There's a couple of deals which actually does really well, and there's a couple of deals which does not go anywhere, right? And it's the same with any investments, right? Some you make money, some you don't make money, and then some you make losses, right? But I think the difference between private equity guys and also guys like me and equity analysts is that private equity, the risk is much higher, right? So the risk is much higher, but the payout is also quite good lah, basically, since you're actually going very early into the company, right? So I think one of the things which we can learn over here are a couple of things lah, right? I think number one, right, is that, even for companies like Grab, right, they also need a couple of rounds of funding in order for them to grow, right? So I think Grab, when they first started, I think they started over in Malaysia, and then after that, as they need more and more funding, they went to Singapore, right? And Singapore has a bigger pool of fund, and then after that, they just grew and grew and grew. And for every time we actually get funded, right, there is also certain milestones, right? Maybe, for example, this company, right, they do cab services, right? And they want to actually first, hey, thanks for the likes, thank you so very much. They want to actually start doing cab services, right? And what it is first they actually do it in Malaysia, right? And then they have to pay maybe there's some fees, regulatory, and also some other fees lah, basically, right? So that in itself will take some money, right? And then if they want to go into ASEAN regions, say into Singapore, right, that's another set of fees. And then if they want to go to Vietnam, there's another set of fees. So every time they expanded, it was one round of funding after another round of funding after another round of funding, right? And the whole thing of it all is that we hear this thing that says, it's normal for companies or it's normal for startups to actually burn capital lah, or burn cash in the beginning. And truth be told, as I said, number one, if you're doing something very new, the chances for a lot of the management and also the owner, right, to make mistakes. I mean, it's just like you and me, right? I mean, if we start a new hobby, or right now, even my YouTube channel, right, I'm sure there are a couple of episodes which are really, like, really, really horrible episodes. And there's some episodes which are actually really good episodes, right? It's the same thing. If you have a startup and you are investing in a startup, the chances for the owner to actually burn a lot of cash is actually quite high. The whole thing of it all, there is a very steep learning curve, right? And with that, that's one of the reasons why people will fund the company from stages to stages, right? This will limit the losses or the gains, right? So that was one of the reasons why, people say that startups actually offer growth potential. And let me tell you something that will really blow your mind and why there's this industry called the private equity industry, right? Right now, there's this company called Amazon, right? I'm not sure you know Amazon, right? And Amazon, when it went IPO, and this is not even this was not even pre-IPO, guys. This is post-IPO. That means the equity analysts will come inside, right? When they first got listed, after you have already done all the stock splits and whatnot, right? Amazon was 9 cents only. 9 cents only. Today is $208. Effectively, this stock went up by 200,000%. Let me repeat this again. This is very important. During the IPO of Amazon, it was 9 cents. Today, it's $208. Within that particular time frame, it actually rose by 200,000 times. 200,000%. And if you put 100 ringgit, right, that 100 ringgit will be 100,000 ringgit. Let it blow your mind, right? If you put 100 ringgit, that money will become 100,000 ringgit. But honestly, truth be told, I remembered when I was studying I was quite a nerdy guy basically. While I was studying, I still remember looking at stocks in the US. I was a student when Amazon got listed, and I was interested in stocks, right? And I still remembered a lot of analysts talking about Amazon and how the chances for it to go under was very high. The whole thing of it all is that every time they were making losses the first couple of years. They were making losses the first couple of years, and that's one of the reasons why a lot of PE investors and also early IPO investors, they don't mind absorbing the losses as they know the long-term gains are much higher, right? Let me repeat this again. A lot of PE and also early IPO investors, they don't mind absorbing the losses as they know the gains are really, really good, lah, right? So I guess these are three things which I want to talk a little bit about, and these are the things which I saw with my own eyes. I know it's very difficult to tell whether a company is going to be explosive growth or whether the company may go under, right? Especially during the pre-IPO and also the seed funding days lah. All right, I see someone John Doe saying BTC all-time high, withdraw all of. Right, the only thing that blows my mind is US and crypto. Okay. I'll talk a little bit about the US market very, very soon lah. Actually, I actually have I bought this particular ETF. It's called TQQQ, right? It made 40%. For an ETF that makes 40%, my mind was just blown. I'm like, whoa, this wow, US markets is different. It's a different beast and different animal altogether. So anyway, going back to Fashion Valet and what we can all learn lah, basically, right? So I wanted to understand, and I wanted to share with you guys some of the indicators on whether a company, some of the indicators where, the company may be making a lot of losses, lah, right? So I think the first indicator is Fashion Valet was an e-commerce platform, right? And when they decided to go into physical stores, right, they decided to open in both Pavilion and also Bangsa. So if these stores were to open in Pavilion and Bangsa, the whole thing of it all, it's going to be very expensive, especially the rental, right? So when going to a lot of these high-end places, rental is going to be a lot more expensive. On top of that, they need to hire staff, right? So, back in the day when it was an e-commerce store, right, all you need is just your laptop, internet access, and you have all all of your stocks right behind you, right? In fact, you can actually run your whole business in a small little room, right? But as this company actually moved from e-commerce to the bricks and mortar, or they started expanding their presence in not only Malaysia but also across the region, it's going to incur a lot of costs. Number one is a lot of capex. Number two is going to be a lot of staff costs, right? And every month they need to pay a big sum of money, right? So that's the first thing which I saw. I was like, whoa, it's going to be a bit expensive for them. Second thing I saw was that competitors were entering the market, and at that point in time, I still remembered, I don't know whether there was any Shopee or Lazada back then, right? But I think there was Lazada. But then when they entered, then came Zalora, Lazada, Shopee. And on top of that, there was also the ability of people setting up their store, their online store. And it was much easier. So the barriers to entry was getting lower and lower and lower. And guys, what basically happens is that when your business all of a sudden had a very big market share, all of a sudden when you see more and more competition, basically you're going to see your market share shrink. And when your market share shrinks, this will basically see your sales number drop, right? That's the second thing. The third thing is that when you look at the balance sheet, it doesn't look so convincing lah, basically, right? Number one, with their expansion, especially in physical location, it incurred more monthly cost, and also one-off cost. You need to build up the store and whatnot, right? So that's that's a lot of one-off expenses. And on top of that, you need to hire people, right? The more areas you expand, you need to hire more and more people to actually service the shops, right? So number one, increase in expenses. Number two, you can see that in terms of income or in terms of competition, as more and more competition enters the market, obviously the revenue pie will have to be shared with other people. So if you look at two and two, basically what has happened is that it was very competitive for I guess Fashion Valet, right? So I think all in all I wanted to say is this lah. Basically, I think one thing that we can learn, right, from over here is that if you want to invest, always remember that you're investing in a business. Always make sure that the business has their competitive advantage. If a business have a very strong competitive advantage, they can charge a higher price. An example of this is maybe the iPhone. Many years back. Back in the day, iPhone, right, was the only smartphone. I mean, I'm talking many years ago, right? That was the only phone, right? And of course, they can charge any price, right? So you want to make sure whatever company you invest in has a unique selling proposition, very unique in the market, right? And you want to make sure that the company is also profitable, right? So, if you have these two, and also if you look at their income and revenue is growing and growing, is maybe a company worth exploring, right? So this is my small thoughts on Fashion Valet. I hope that you guys found it helpful, and if you have any questions, please do ask, right? I'm actually going through the chats. Okay, so with that, I'd like to thank everyone, and also I noticed someone actually mentioned something a little bit about Bitcoin, right? And honestly, after America got their new president, we could see that not only the equity markets rose, but also we could see that other alternative assets also increased. So I hope that you found this useful. Any questions before I end? All right. So I hope to see you guys very soon. I'm going to thank you so much, John Doe. Yeah, I'm going to restart firing my live sessions. I've been a bit tied up by doing. I don't know whether you noticed. I'm doing a lot of content in Bahasa right now. So thank you so much. Yeah, I've been doing a lot of content over in Bahasa, so I had to translate from English to Bahasa. So yeah, it takes me some time. But I do want to reach a wider audience, right? And I think financial literacy should cut across all social, I guess, social and economic backgrounds, basically, right? So I think BM is a very widely used language. So in Malaysia at least. So I noticed another question. Hang on. Hindi can. Hindi cannot lah, bro. Yeah, I may look like it, but no, I cannot speak Hindi. I'm horrible. If there's an AI that enables me to translate what I'm saying in English to Hindi, definitely we will try to find that particular AI to help me expand my reach or my content to even the Hindi speaking audience. All right, guys, with that, take care. All right. Thank you, John Doe. Take care. Bye.